Hello everyone, this is Professor MoneyPigTrading, a former AI researcher, now a data scientist and trader. And today we're going to talk about why tapering is actually good for the crypto and stock markets. So yesterday, August 27, 2021, the Federal Reserve Chairman Powell actually made a speech in the Federal Reserve annual meeting in Jackson Hole. This year, because of COVID, it's virtual. Last year was canceled. So this year in the virtual meeting, he actually mentioned that the economy has slowly improved. Inflation is heading to the 2% target. The employment rate is still lower than the before COVID. About long-term employment rate is about 2% before COVID, and now still around 5.6%. So the economy is heading to there, and but it's still not there yet. So they're discussing about tapering, which is the amount of money they put into the market to purchase bond to stabilize the market. And now they are talking about potentially to decrease it. However, he make a clear distinction between tapering and increase the interest rate, just like what Federal Reserve did in 2013, where they also make a clear distinction between interest rate hike and the tapering. And after the 2013 Jackson Hole meeting, stock market actually continued to rally, and we'll see later in more details. And Jackson Hole is actually a very pretty place, very close to Grand Teton. And it's one of the pictures I took in one of a road trip to Grand Teton, Yellowstone. It's an extremely beautiful place to have an annual meeting, just in case you have never heard of this place. It's very nice and definitely worth a visit. And it's right before the lake of the Teton Range, very beautiful. Especially in the summertime when the cloud is clear, the sky is clear, and you can see the reflection when the wind starts to blow. It's one of the prettiest places I've ever seen on the earth, planet Earth. So if you haven't liked this video, make sure to like it. That'll help our YouTube channel tremendously. If you're interested in Discord community, feel free to check out www.moneypigtrading.com, our Twitter, YouTube, Instagram, or MoneyPigTrading, and feel free to follow to get the latest contents. And like we posted on Twitter on August 23rd before the Federal Reserve annual meeting, we mentioned tapering is like rain, right? If it's not like if it rains, the world is going to end. If it rains too heavily, yes, it's going to be bad. But if it just drizzles, it's actually pretty healthy. And we do think the stock market will react on the key on how and when the Federal Reserve will taper instead of tapering or not, because we know tapering is happening. But if it taper slowly, I think it's very healthy for the stock market. Like we have seen on Friday, the SPY actually rallied to all-time high 450. And if they just taper pretty slowly without any near-term interest rate hike, the market will actually release all the worriness on the interest rate hike and continue to rally. That's what we have seen on Friday. And I know a lot of people, YouTuber on social media, on TikTok, mentioned that the stock market is going to crash. And the higher, the bigger the voice saying the stock market is going to crash, the more videos like and view they got, which doesn't make any sense. I know there's strategies to catch eyeballs, and one day when the stock market correct, maybe after 5 years later, they will say, yeah, I'm right. But looking at the data, right? I know SPY goes up a lot. Psychologically, you will think, okay, it's overpriced. But let's look at the data itself. This is a chart we pulled directly from S&P Global, the company that runs S&P 500. The blue line is the S&P 500 price divided by $100 per share. The red line is earning per share. The unit is dollar per share. The reason we divided by 100 is just trying to match the earning per share, so it's in the same scale and it's easier to look at. The x-axis is the per quarter, and you can see that EPS for SPY has continued to rally since the beginning of the available data in 1988. In the dot-com bubble, the EPS and SPY both dropped. And a lot of people compare the current SPY and the market to dot-com bubble, which I think there's some similarity. The number of IPO is ridiculously high, like right now in the dot-com bubble. But a lot of the companies right now, especially the FAANG, Facebook, Apple, Netflix, Nvidia, and Google, their earning revenue numbers are amazing. It's not like dot-com bubble, those companies, where most of them cannot even make a single penny, okay? So they're very different. And looking at the whole market's earning per share, it's actually continued to test all-time high. And since stock price is actually reflecting the future guidance and whether the company how's its profitability and revenue, If we're seeing this earning per share continue to rise, that means the US economy is doing extremely well. The companies are being innovative and they're expanding globally and making a general return, pretty handsome returns. And therefore, the stock price are very rewarding together with the stock price. So saying that psychologically SPY is very overvalued, too high, is going to pull back without any data support, that just doesn't make a lot of sense, at least in my humble opinion. And like we mentioned, tapering is unlikely to negatively impact growth stocks. It's only the interest rate hike is likely to negatively impact growth stocks. So let's take a look. We actually showed this chart in our previous video. We mentioned this 2021, the stock market is very similar to 2013 to 2016 when the stock market is going to start tapering and the interest rates start to hike. Let's take a look at the Federal Reserve Bank SOMA, which is the amount of money they put into the market, which is the YX on both charts and the red line. And the blue, the dark black line is actually the SPY price, and the axis is actually the date. You probably cannot see because there's just too many dates. So let's take a look. When the Federal Reserve said they're going to taper in 2013, actually SPY continued to rise. When the taper really starts, like I mentioned, it's more like drizzles, right? It's like a drizzle rain. Federal Reserve really didn't drop significantly of its asset purchase. It actually tapered a little bit. At the beginning, didn't just increase. It just doesn't change its asset purchase, and then drop a little bit. And the stock market actually reacted really well. The only correction that really happened is on December 17, 2015. When the Fed chief back to those days, Ms. Yellen, actually said, okay, we're going to increase interest rate. And we can see SPY actually drop from around 212 all the way to around 185. And then stock market continued to rally. And the next time Federal Reserve said they're going to increase the interest rate in December 15, 2016, the stock market only pulled back a little bit and continued to rally into the current state. And on the right side, this chart just show you that 2013 and 2016 compared to the current day level. I know the Fed SOMA balance right now is way higher than 2013 to 16 level, but like we mentioned in the previous chart, the EPS of SPY actually also rise all the way way higher than 2013 2015 level, right? Like almost double from the 2013 level. So looking at 2013 after tapering, this is SPY daily chart. Right after the 2013 Federal Reserve annual Jackson Hole meeting, I mentioned September they're going to taper, and then taper actually happened at the end of the year in December. You can see that SPY actually, instead of pulling back heavily, continue to repeat the downtrend and actually rally 11.5% to the year end in 2013. And QQQ actually rally even higher, which is a growth stock with most of the tech companies, actually rally 18%. Small caps in the other one after a tapering announcement, a small cap actually around plus 12.6% in that year. And financial name, a lot of people are expecting is going to run even higher, but in 2013 it's actually underperformed compared to QQQ and SPY. You run up, but only run up 9.9%. So yeah, that's just a highlight why tapering is actually really a bullish news for the market. And instead of a lot of people are calling bullish a bearish turn, in my humble opinion, the data right now only suggests a SPY going even higher. Of course, I'm not ruling out there's a possibility of pullback or some kind of correction, maybe 5%, 3%, which is healthy. But I think the SPY uptrend will continue at least to the year end, and we'll have to wait and see when the Federal Reserve will really start to increase the interest rate, which I humbly believe will be at some point in 2023. So just want to highlight, we have a really robust Discord community, option-based swing trading program. One member joined. 1 month later, his account grew from $2,200 to about $12,000. It's a 540% growth. And we also have a very robust long-term investment program. Number of trades this year in 2021 is 54. Average return per trade is 21% with 75.5% winning rate, which is pretty decent. So again, if you're in North America or interested in our Discord community, feel free to check out www.moneypigtrading.com. Don't forget to follow us on Twitter, YouTube, Instagram, MoneyPigTrading. And thanks for watching. I'll see you guys in the next video. Bye-bye.